Hey everyone, and welcome. Today, we've got a seriously fascinating corporate filing to unpack. Now, if you follow the tech and logistics space even a little bit, you already know that Eternal Limited, the company formerly known as ZOMATO, is an absolute heavyweight. Well, on July 22nd, 2026, their board of directors got together to approve their Q1 financials and, more importantly, lay the groundwork for some major strategic restructuring. I know, corporate filings can often feel like this dense, impossible maze of legalese and accounting jargon, but today, we're cutting right through the noise. We are going to use the exact documents submitted to the stock exchanges to demystify what Eternal Limited is actually doing, where their cash is flowing, and what risks are hovering out there on the horizon.
Okay, let's dive into this. Here is our roadmap for the explainer. 1. Q1 financial performance. 2. The NUGGET business transfer. 3. Focus on AI support. 4. Auditor notes and GST. And finally, 5. Annual general meeting details.
All right, part 1. Q1 financial performance. The headline numbers.
So, before a company can go off and engage in fancy internal restructuring or spin up brand new tech platforms, we've got to look at the top line, right? Is the core engine of the business actually growing? And this brilliantly illustrates their consolidated revenue from operations. I mean, just look at this massive upward trajectory. Back in the quarter ending June 2025, they posted 7,167 crore. By March 2026, that had climbed all the way to 17,292 crore. And now, for the quarter ending June 30, 2026, they've completely broken the 20,000 mark, hitting a staggering 20,211 crore INR. That is some seriously aggressive, sustained top-line growth. It basically tells us that the operational volume of the whole operation is expanding rapidly, quarter over quarter.
But revenue is only half the story. We've got to look at the bottom line. This number right here, 92, represents their profit for the period ending June 30, 2026. That's 92 crore INR. Now, their expenses, especially things like purchases of stock in trade and delivery charges, are understandably massive to support a 20,000 crore revenue machine. But they are still pulling a net positive profit, and this is absolutely crucial context. It establishes that Eternal Limited is operating from a real position of fiscal stability. They aren't restructuring out of desperation, they're doing it from a solid baseline of profitability.
Moving right along to Section 2, the NUGGET business transfer, internal restructuring.
With that financial baseline set, the board went ahead and approved a significant business transfer agreement, or BTA, for a segment operating under the name NUGGET by ZOMATO. Now, what's really interesting about this slide is the valuation. It's a cash consideration of 35 crore INR. The documents explicitly stipulate that this amount has to be paid within 30 days of the agreement's execution date, which was July 22, 2026. But who is actually paying whom here? Let's follow the money.
Okay, here's the anatomy of the transfer. On one side, we have the parent company, Eternal Limited, which is transferring the NUGGET business completely out of its direct operations. On the receiving end is CTPL, that's Car the Road Technologies Private Limited. But here's the catch. CTPL is actually a wholly owned subsidiary of Eternal. So in essence, the parent company is literally just moving assets from its left pocket over to its right pocket. CTPL pays the parent company 35 crore INR and in return takes full, immediate ownership of the NUGGET operations. Now, the filing officially classifies this transaction as a slump sale on a going concern basis, which is just corporate jargon, meaning they are moving the entire NUGGET business as a single functioning unit. They aren't going through with a clipboard and pricing out every desk, computer, or piece of intellectual property individually. Nope, they just slapped a single lump sum price tag of 35 crore on the whole shebang and moved it over. Honestly, it's the cleanest, fastest way to execute an internal restructuring like this.
So why are they doing it? Well, Annexure A of the filing gives us the exact rationale straight from the board. It's an internal restructuring exercise to streamline our corporate structure. By shifting this specific unit into a dedicated subsidiary, the parent company gets to keep its main books cleaner, and it allows the subsidiary to focus 100% on its own specific operational goals.
Which brings us to Section 3, Focus on AI Support, the future for CTPL. Think about it. If CTPL just dropped 35 crore for this business, what exactly are they going to do with it? What's the grand strategic vision for this newly streamlined entity? Well, the filing states very clearly that CTPL will carry on the business of a B2B AI-driven support platform. Guys, this is a massive tech-forward pivot. Instead of just managing logistics or consumer delivery, they're carving out a distinct business-to-business entity focused entirely on artificial intelligence support. It strongly suggests Eternal is looking to commercialize its own internal tech capabilities and offer AI solutions to other businesses. It is a wildly fascinating evolution for a company we originally just knew for food delivery.
But to really grasp this, we need to put the Nugget business into perspective. The filing notes that for the financial year 25-26, Nugget's revenue was just 7.20 crore INR. To put that into perspective, that represents a microscopic 0.07% of the company's standalone revenue. Its net worth? Just 10.54 crore, which is 0.03% of the standalone net worth. So, while an AI-driven B2B platform is strategically super exciting, right now it makes up a tiny fraction of Eternal's overall empire. The filing also points out that because this is a related party transaction, parent to subsidiary, it was conducted at arm's length. This just means the 35 crore valuation was determined fairly, as if the two companies were total strangers, just to satisfy the regulatory compliance folks.
Let's move to Section 4 and see how this builds out the larger picture: auditor notes and GST, governance and risks.
Whenever a company reports financials of this absolute magnitude, the independent auditor's report is where you're going to find the most crucial caveats and risks. For this quarter, the review was handled by the highly respected firm Deloitte Haskins & Sells. Now, it's worth noting, this is what's called a limited review of unaudited financials, which is completely standard for quarterly updates. It just means Deloitte asked the right questions and applied analytical procedures, but they didn't do a full exhaustive audit. Even so, Deloitte signed off on the numbers, basically stating nothing came to their attention, suggesting the financials were prepared incorrectly. However, Deloitte did draw attention to one very specific issue.
In Note 6 of the consolidated results, the auditors highlight an ongoing situation regarding goods and services tax, or GST, authorities. The company has essentially received orders regarding GST that is specifically applied to delivery charges. According to the document, Eternal Limited, supported by their external experts, maintains they have a strong case on the merits. The ultimate financial outcome of this GST dispute remains unresolved and is totally dependent on the authority's final ruling. So this represents a macroeconomic risk factor that investors are absolutely going to be tracking very closely.
All right, wrapping things up with Section 5, Annual General Meeting Details, looking ahead.
So, with the Q1 books closed, the internal restructuring all approved, and the auditor's notes filed, the board's last major piece of business was to look ahead and schedule the annual general meeting, the AGM, where the shareholders actually get their say. So the crucial point is getting these logistics on the calendar. The 16th annual general meeting is officially set for Wednesday, August 26, 2026, at 12 p.m. Indian Standard Time. And keeping with modern corporate trends, this whole thing is going to be held via video conferencing. The key agenda items? First, the formal adoption of the audited financials for the previous full year ending March 2026. And second, they'll be voting on the reappointment of Sanjeev Bikhchandani as a non-executive nominee director. He's retiring by rotation, but has offered himself up to be reappointed.
Man, we have covered a lot of ground today. We moved from a massive 20,000 crore revenue baseline down to a 35 crore internal transfer designed to spark a brand new AI venture. It's clear the board of Eternal Limited is really pushing for streamlined, tech-focused growth, all while navigating some pretty complex tax landscapes. But it leaves us with a compelling thought to end on. As we look toward Q2, how is the pending resolution of those GST disputes on delivery charges going to impact their massive logistics overhead? And how quickly can this newly independent, AI-driven CTPL platform start contributing more than just 0.07% to the parent company's bottom line? Honestly, the answers to those questions are probably going to define the next chapter for this corporate giant. Thanks so much for joining me to unpack this explainer, and keep learning.